So this is a sum of partnership which is related to Carlos and Erika, May June 2018, paper 23. And in this sum, they have asked you to find out the profit for the year. Although it is a sum of partnership, but the main area where they are trying to test you over here is on depreciation. It is a sum of partnership. That means it has a profit and loss appropriation account. It has a current account. It has things related to partnership. But everything will go wrong if concept of depreciation is not known. Okay. We will also stick to that concept of depreciation, which is very hard. And if in any other places it is tested, it is going to be the same concept that is going to be tested. Come on, let's see. Depreciation is on non-current assets. You all know that, right? Hello.
Yes,
Depreciation
miss.
is always on the non-current assets. And you know that whenever you start removing depreciation from the cost of the asset, when you subtract your depreciation, you get something which is called as your net book value. Okay. If the depreciation is on costs, every year you will charge depreciation on this cost. So even in this year, if you have to charge depreciation, you will charge depreciation on costs. Are you with me? So costs minus depreciation is net book value. If the depreciation is as per the straight line method or it is on cost, every year depreciation is charged on cost. Are you with me? So whenever you have to remove depreciation on cost or straight line method, you will find this depreciation, you will calculate the depreciation on cost. When you have to remove depreciation as per reducing balance method, you will remove depreciation on this net book value. Are you with me? There is
Yeah,
another
miss.
concept over here which is called the accumulated depreciation. Accumulated depreciation means depreciation clubbed up. All the depreciation of all the years together, when you combine, you get accumulated depreciation. This is the basic thing which you have done in IGCSE. Okay. Now, when things get complicated in case of depreciation, is you also buy an asset, you sell an asset, you have to remove depreciation for the current year, you have to dispose of an asset, buy an asset, and it all confuses up. In that scenario, you make a timeline of the things and do everything step by step. Okay, let's see over here. Another thing that you have to remember when you're disposing an asset, buying an asset is very easy. You buy the asset, remove depreciation for the full year, khalas. But when you're disposing an asset, you will always ensure that you find four things related to the asset disposed and give effect of those four things. You have to find four things. You have to give effects of those four things for the asset disposed. Okay, we call it as caps. Find the cap and give effect of the cap, but not one cap, many caps. Okay, so when you're disposing an asset, you should always find out cost of the asset disposed, accumulated depreciation of the asset disposed. I'm adding a word over here, up to date of sales. What? Up to date of sales. Profit or loss on the asset disposed and the selling price of the asset disposed. Whenever you are disposing of an asset, you have to forget everything and run behind your asset disposed. Find out four things related to asset disposed and give effects of four things related to asset disposed. Cost of the asset disposed, accumulated depreciation of the asset disposed, profit or loss on sale of asset, and the selling price of the asset disposed. With this, I will pause the video. You all will take 2 minutes time, exactly 2 minutes, and try to find out these four things related to asset disposed before I take you to the question. Whenever you're depreciating, you're dealing with depreciation, and there is asset disposed, you will always look at finding the caps. Cost of the asset disposed, accumulated depreciation of the asset disposed, profit or loss on sale of asset, and selling price of your asset. Okay, you will first find it and then look at giving the effects of it. Okay, so here we have adjustments that is related to the asset disposed. On 1st of December 2016, so the asset was sold on 1st December. In depreciation, your dates are always useful. Your asset was sold for 6,800. Can you tell me what does this mean?
Means that the asset was disposed for 6,800 and it was bought for 10,000.
It is sold for 6,800. Simply given directly, this asset is sold for 6,800. Are you with me?
Yes.
Okay. This asset was purchased for 10,000. What does this mean?
The cost of the asset was 10,000.
Very good. The cost of the asset was 10,000. Now, after going ahead, I need to find two things is this and this accumulated depreciation and the profit or loss. Are you with me? Are you with
Yeah.
me?
Yes, miss.
I know one thing very clearly that from the cost, when I am going to subtract the accumulated depreciation, what I am going to get is the net book value of the asset sold. This I will compare it with the selling price, and I know the selling price is 6,800, and I will get my profit or loss. So here I am left with two blank things. I don't know my accumulated depreciation, I don't know my profit or loss. Are you with me? Are you with me?
Yes.
Okay. Now for this, I need to go back to the question and I need to see. I am preparing my statements for 31st July 2017. And year is starting on 1st August 2016. Are you with me? Are you with me?
Yeah, yeah.
So my current year is starting in 16, it is ending in 17. So it is starting in August 16, ending in July 17. Are you with me?
Yes.
Apart from this, there is a policy. Full year depreciation is charged in the year of purchase and none in the year of disposal. That means for my asset disposed in this year, I am not going to charge any depreciation. So for my asset disposed for this year, there will be no depreciation. Are you with me?
Yes. Miss, the opening dates will be 1st August and
I am not
31st July.
bothered about it. I just want the month, August to July. It will always be
Okay.
it will always be 1 to 31. Okay. Yeah, I'm teaching depreciation. Let's focus on depreciation. August to July 16, 17. This is my current year. And my policy is no depreciation in the year of sales and full year depreciation in the year of purchase. I know that I have sold this asset on 1st December 2016. December 2016 very well falls in my current year. With me, yes or
Yes.
no?
Yes.
Okay. Fine. Now I'm looking for accumulated depreciation of the assets sold. That means everything before that. Now, before I go to everything before that, I can make a timeline for myself. This would be 15, 16. Yes.
Yeah.
This would be 14, 15. Just to tell a yes or a no, it's taking so much of pain for you all.
Yes, 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 yes.
August and July. Okay.
Yes.
Asset that was sold on 1st December 2016 had been purchased when 1st May 2015. Tell me, where does May fall? May, June, July. Right? That means asset falls here. Purchased here. Asset was purchased in May 2015. That means asset was purchased here. August to July, right?
Yes.
June, July. Asset was purchased here. So 1 year depreciation would be for 14, 15. Second year depreciation would be for 15, 16. Yes.
Yes.
So my first year is 14, 15 and my second year would be 15, 16. I am going to chart depreciation for 2 years. Now what was the cost of the asset that was purchased? 10,000. Depreciation is straight line method. Percentage is 10%. So depreciation for the first year, net book value 9,000. Depreciation for the second year, net book value would be 8,000.
Miss, why are we charging depreciation for the second year?
I am selling the asset in this year.
Yeah.
Yeah, there is no depreciation in the year of sale. Full year depreciation
Okay.
in the year of purchase. Year of purchase is this. Year of sales is this. Year of purchase is 14, 15. So 15, 16 also depreciation has to be charged, right?
Isn't it sold in 15/16 on
This is
1st December?
thing that I did. When is my year
Oh,
starting?
1st August 2016.
When is my year ending?
31st July 2017.
Okay. So year is starting in 1st August, ending on 31st of July. When is
Yeah.
the asset getting sold?
31st. Oh, okay. So it falls under 15th. Okay, yeah.
It falls under 16, 17 because this is
Yeah, 16, 17.
over here. So now if I see the accumulated depreciation of the asset sold, so it would be 1 and 2. 2,000 is the accumulated depreciation of the asset sold. Yes.
Yeah.
August 10,000. 2,000 is the accumulated depreciation of the asset sold. The net book value is 8,000. Asset is sold for 6,800. What is the profit or loss on sales? 2,800. An asset of 8,000
2,800
for 6,800. 2,800 is
loss.
the loss on sale. Are you with me? Now the effect of it. If your asset is disposed of, okay, first I'm giving you time, write this. So now you know your profit or loss on sale of asset, it is 1,200, correct?
Yeah.
Okay, fine. So you found the cost of the asset disposed, you found the accumulated depreciation of the asset disposed, you found the profit or loss on the asset disposed, plus you found the selling price of the asset disposed. After this, you have to give effects in your statement of the things that you have found out. Okay? So,
Okay.
what are the effects? Remove cost from cost. Okay? So that you get remaining assets. To get what?
Remaining.
Remaining assets. So from your cost, you will remove your cost of which asset? Of the asset disposed to get your remaining assets. So remove the cost from costs, then remove accumulated depreciation from accumulated depreciation to get accumulated depreciation of remaining assets. Now you only want your remaining assets. Profit or loss will either be other income or it would be other expenses. And selling price would be recorded only if you make a cash book. Are you with me?
Yeah.
So from the cost, I'm going to remove the cost. The cost of the asset disposed is 10,000. So my remaining assets is 75,000. Sorry, 55,000. From the accumulated depreciation, I'm going to remove the accumulated depreciation of the asset disposed. So my accumulated depreciation of remaining assets is 3,000. Are you with me?
Yes, miss.
Now, if I have to calculate the depreciation on net book value, I will take 55 minus 3,000, get the new net book value and calculate depreciation. If I have to calculate depreciation on straight line method, I will calculate on straight line method. But if there is no additional purchases, are you with me?
Yes.
So when I disposed of the asset, I remove the cost from cost, I remove the accumulated depreciation from accumulated depreciation. I got remaining cost, remaining AP. With me?
Yes.
Now I go to the next adjustment. This was my book values given to me. Now they are telling on 1st November 2016. When does 1st November 2016 fall? Which year?
16 to 17, August
The
to July.
current year.
Yeah.
You have purchased a new machinery for 7,500. So from 65, I first remove 10,000 and I add 7,500. Full year's depreciation in the year of purchase? Yes or no?
Yes.
Okay. So my remaining assets are from the 65,000, I will minus the 10,000. I will add the 7,500. So my remaining assets are 62,500. Full year depreciation in the year of purchase. Depreciation is on straight line method. So depreciation for the current year. Depreciation for the current year is 6,500, which will be recorded in other expenses. So things related to the asset disposed would be to the plant and machinery would be one is depreciation of the current year, which is on which method?
Straight line method.
Straight line method. Second thing would be the loss on sale of assets. How much?
1,200.
1,200. That means only two things related to the asset, but four things related to the asset disposed has to be done before you arrive at this depreciation. Okay? So whenever you have asset purchase, asset sold, depreciation policy, first thing you will do is you will make a timeline. When is my current year? When it is purchased? When it is sold? Second thing you will do is you will find caps Cost of the asset, accumulated depreciation of the asset disposed, profit or loss on sale of asset, and the selling price of the asset sold. Then you will give effect. From the cost, remove the cost. From the AD, remove the AD. Profit or loss will be OI or OE. You get the cost of your remaining assets. If it is straight line method, remove depreciation on costs. If it is written down value method, then from your remaining assets, remove the remaining AD, get the net book value of the remaining assets and remove depreciation from them. I again want you to solve the entire depreciation part of plant and machinery.